on your screen, Cynthia.
All right, welcome everyone to our first Eastside Recovery Hub webinar hosted by One Redmond. All our Eastside cities and chambers are partnered together to give the highest level of support to our local business community. My name is Christina Hudson and I am Executive Director for One Redmond, and I will also be the moderator for today. Before we begin, I want to cover a few housekeeping notes. If you need help during the webinar, please use the chat box. We have staff on hand to try and help you with any issues you may be experiencing. We also have links to documents in that chat box that you can download as well. The tools that we have here will also be available on our website, eastsiderecoveryhub.com. And if you have any questions for the speakers, please use the Q&A box. We will do our very best to get these questions answered by our speakers. And since we have hundreds of people on this webinar, we know we can't possibly get to everyone during this hour. But if we don't get to your question, don't worry. Our staff will go through all the unanswered questions after the program, and we'll work to get answers out to everyone as soon as we can. This is the first of a financial webinar series that we are putting together. Our team at One Redmond is very excited to be the host as we work with our Eastside partners to get you the information you need as soon as possible. We know that there are many small businesses that are looking for a pathway to recovery, and financial resources is a critical element to that process. So today, we are covering the CARES package that was just signed into law on Friday. Now the funding has been allocated, and now there's a whole army of people working out the details on how these programs are going to be implemented. Our speakers today are sharing the most up-to-date information. And because the situation is very dynamic, this webinar will not have PowerPoints from our speakers, because by the time we receive their approved slide deck, the information might be outdated, and we wanted to make sure you had this information as soon as possible, and we didn't want to wait because you need the guidance now. And please note, we did add an additional speaker to today's program, so now we have 3 speakers. Today we have Mark Costello, Janie Sacco, and Cynthia Cowell. Mark Costello is the Deputy Director of the Seattle District for the Small Business Administration, and he will give us an overview of the SBA program and the updates with the new CARES Act. Next, we have Janie Sacco, First Vice President at U.S. Metro Bank. She is a 30-year veteran in SBA lending. She will give an overview of how to prepare and what to expect when working with your SBA bank lending program. And last, we have Cynthia Cowell. She is the Public Information Officer for the U.S. Small Business Administration in the Office of Disaster Assistance. She will talk about the application process and economic injury loans and grants. So now I would like to turn it over to Mark Costello, Deputy Director at the SBA Seattle District Office. Mark?
Thanks very much, Christina. I really appreciate the invitation to be here today and really the opportunity to speak with all your Eastside small business members and community. Obviously, this has been a fast-changing but certainly challenging time, and at the Small Business Administration, we're in a unique position to be able to actually be part of what we hope is going to be a couple of very impactful programs that are going to make a difference for small businesses and allow them to sustain themselves until such time as the economy and really everybody's lives in general return to a state of normalcy. Cynthia, my colleague from the Disaster Center, is going to discuss one of the programs that is actually out right now and available to small businesses, and that is the Economic Injury Disaster Loan Program. I'm not going to talk much about that other than to make the point that there are actually 3 specific tools available to small businesses through both the CARES Act and through the traditional framework of the Small Business Administration. I want to urge people to, if nothing else, think about occasionally checking the SBA website. It's sba.gov, and it's really intuitive to get to a nice menu of our programs. So right at sba.gov, the front page, if you click on Learn More under the coronavirus picture, it's going to take you to a menu of the programs that we're going to discuss a little bit today. Among those, again, being the Economic Injury Disaster Loan Program, but also the Paycheck Protection Program, and also a debt relief program that SBA is involved with. And let me jump to that one right away. I want all of the businesses out there that have existing Small Business Administration guaranteed loans or 504 loans that were made in conjunction with a certified development company. I want you guys to be aware that starting on March 27th, the payments that are required to service those loans over the next 6 months are being paid by the Small Business Administration. So there is a breathing room that's been facilitated by the CARES Act. What will happen if you do make a loan payment is your lender is going to be required to get back with you and ask you if you would like the money back or if you would like it applied against the principal balance of your loan. In either case, hopefully that's going to be an advantage and a benefit for you guys. I want to talk for a couple of minutes here. There's a lot of information. Some of it is maybe not quite as detailed as we'd like, but there's a lot of information that is rolling out relative to the Paycheck Protection Program. So if you go to that SBA.gov site and you click on Learn More, the Paycheck Protection Program is going to be front and center on that menu of programs. So this is kind of the, I guess what you might call the linchpin program for small businesses contained in the CARES Act. $349 billion was allocated for the purpose of providing funding to small businesses through the Paycheck Protection Program. This is a lot of money. Our typical kind of high watermark of loan activity on any given year with our guaranteed loan programs is around $30 billion. And with the Paycheck Protection Program, we're looking to push out about $350 billion in 3 months. So this is a unique tool. It's unlike the regular SBA guaranteed loan program. These loans are going to be available through a myriad of SBA lenders, a lot of the ones that regularly do SBA loans, as well as a number of other regulated institutions, are going to be able to provide this funding. The idea here is, as I describe it, fairly similar, I think you'll find, to what Cynthia is going to describe with the Economic Injury Disaster Loan Program. The intent is to provide funding to businesses to allow small businesses to maintain and kind of maintain the status quo, if you will, until such time as the economy returns to normalcy and we get past this economic interruption that we're in the midst of right now. What SBA is looking at is a period of about 10 weeks of assistance through this program. The idea is these are loans that are going to be made directly by lenders, guaranteed by SBA 100%, and the loan amount itself that you would qualify for is going to be a function of your monthly operating costs. As the program is labeled the Paycheck Protection Program, I think it's fair to say that the focus of this tool is employee retention. Okay, and so the idea is what you're going to be working with your lender on in determining an appropriate loan amount is communicating what your monthly operating costs are. Whatever documentation you have to indicate that is what you're going to want to be compiling to share with your lender. Once you've done that, the idea is that SBA is requiring the lenders to apply a factor of 2.5 times to that number, and that's the basis of determining the loan amount. So essentially 10 weeks of operating costs, 2.5 months, if you will. We're talking not only about all costs associated with payroll, including benefits and taxes, but we're also talking about the ability to incorporate fixed costs such as your monthly rental payment on facilities, monthly rental payment on equipment, any other fixed debt costs that you as a business owner are carrying can also be incorporated into this loan request. Utilities as well, and any other operating costs that you continue to incur, whether you're continuing to be in business or you're on the sidelines. That's the way that these loans are going to be determined. The proceeds then are going to be pushed out to you guys, but there is a significant advantage here in that a lot of the money is going to be subject to debt forgiveness. That's sort of like a grant, although we're not really using the term grant. But in particular, at the very least, the payroll related component of the loan amount will be forgiven if you meet certain requirements. We haven't quite seen exactly what those are, but they have to do basically with retaining those employees. We've heard people ask the logical question, well, we had to lay off our employees. What do we do with that? The idea here is that you will have access to funds necessary to bring the employee back at full pay, full compensation going forward. The idea, the intent is to allow, again, small businesses to be at full capacity, ready to be up and running at such time as the economic and social condition that we're in allows you guys to do that. Where do you get these loans? Again, wide variety of participating lending institutions, including all of the big guys, the national banks, but also the local community banks and regional banks as well are anticipated to be a great source for this funding. What I typically am suggesting that people do is reach out to your bank of account as a starting point. If you don't happen to have a bank of account, there is going to be a list of participating lending institutions published, available through the SBA website. But don't discount things like credit unions as well. SBA is trying to align really a force of lenders sufficient to get this money out quickly and efficiently. And really that's what sets this deal apart from the typical SBA loan and probably the typical commercial loan, in that it's designed for expediency, urgency, and simplicity. The way that I've looked at the application document that I saw, which is a sample, it is a very simple process, but I think it would be really critical for you guys to do two things from a communication perspective right now. Number one, continue to monitor that SBA website as we continue to populate it with more information about these programs. At the SBA website, sba.gov/updates, what that's going to do is give you a chance to put in your email address and your zip code, and you will receive any public facing communication that we send out as soon as we send it. So those are a couple of key things that I think you can do with respect to connecting directly with SBA, making sure that you're as informed as possible on that. But maybe more importantly, from the relationship side and sort of paving the way to access these funds, do think about reaching out to your lender. While we talked about in our communication that the program was going to be available tomorrow, I'm telling people that if it were me, I would probably call my lender on Monday, so that hopefully by then they will have their arms around this thing a little bit, and let them know that you're ready to make application for a Paycheck Protection Program loan. At the very least, you'll be able to get in line, start the conversation with them, find out how they're taking the applications, find out what specific documentation they think that they're going to need from you, so that you're going to be able to pull that stuff together as quickly as possible. You know, I think given our current circumstances where folks are at home and so on, this should be expected to be an electronic process, and that will add, I believe, to the speed with which these funds are going to be made available. So I think this is potentially a game changer for a lot of people. Again, there's a significant debt forgiveness component built into the program. So in some cases, I think it's conceivable that all of the debt will be forgiven. That may not be the case in every circumstance, but understand that that's why this thing has a $350 billion price tag, because the federal government is trying to push this money out directly to small businesses, and it's not designed to burden small businesses with a bunch of debt associated with it. So stay tuned. I think it could be a very impactful tool. Continue to work on that relationship with your lender. If you don't have a lender that you work with now, again, be checking our website, because we're going to publish a list of lenders that are going to be participating in the program. So I think from now in the program, Janie is going to talk a little bit about where lenders are at and kind of the lender perspective on this. And then my colleague Cynthia from our disaster center is going to talk about how that economic injury disaster loan program can be accessed, and some of the features of that program, and maybe how it might be distinguished from the Paycheck Protection Program. But what I want to make sure that you guys do, if you haven't already made application for that disaster loan program, it might be a good idea to stay tuned until all of the information is pushed out with regard to the Paycheck Protection Program, so that you'll have all of the information on both of these programs, and you'll be able to make the most informed decision about the best way forward for you, given your particular circumstances, because there are differences in the two programs. So with that, Christina, I'm going to go ahead and yield the floor back to you, and we'll go from there, and I'm happy to take questions.
Yeah, we're going to take about 5 minutes of questions and then move on to our next speaker. And again, we will get to all the questions after the program as well, if we didn't get to yours in particular. I do have one right now. Hold on. I have a question. Do grants that help small businesses avoid having to lay off full-time employees also apply to independent contractors employed by those same small businesses? In other words, if they're being forced by the current crisis to terminate ongoing contracting relationships with several independent contractors here in the U.S., can they get a forgivable loan to avoid doing that?
Yeah, no, that's the kind of question that we're probably looking to get some further direction on. But I would say that the direction that I sense is that there would be a way to do that, if not directly from the business itself, from the contractor themselves. So what I mean by that is, it may be that the business is not able to necessarily bring that contractor back, but the contractor who has been generating revenue or income or a salary, whatever you want to call it, from being a contractor, that entity, that person would have the ability themselves to apply for this, if that makes sense. In other words, they could cover their labor expenses for the next 10 weeks
Okay, great.
directly.
Thank you. Okay, we have time for a couple more questions. Our next one is, how do we sort SBA lenders by interest rate and fees total? The lists online seem very basic so far. Are any nonprofit or credit unions like BECU on that list?
Right, right. So what I want to say is that this current paycheck protection program is really, it's sort of making these loans like a commodity. And what I mean by that is that there is not going to be a distinction in terms of anything about fees or costs associated with this money. Any of the lenders that have been designated to make these loans are going to do it the same way. The interest rate, I don't know if I mentioned this or not, is on the money that would ultimately be repaid for any lender is 0.5%. The maturity on any money to be repaid is 2 years. There are no fees associated with these loans payable by the small business. So it really doesn't matter who you're going to. Now, what we are hearing preliminarily is, yeah, some banks are anticipating huge volume and they don't think they're going to be able to necessarily entertain clients that aren't already banking with those institutions. I think that remains to be seen. As to the question of credit unions, I'm confident that several credit unions are going to be participating in the program. I'm hopeful that BECU would be one of them, given their size.
All right, great, thank you. And I think we have time for one more question for you. We have a question. Is there a minimum time a company needs to be in business to take advantage of these options? For example, if they open
Yeah,
a new
that's a great
location or
question.
it's
So
a new business.
we've had people pose questions that where they're really uh, have hardly launched, but they're already in a situation where they're incurring obligations, lease obligations, maybe loan obligations, other kinds of fixed monthly payments. That's really what needs to be happening. If you can establish that, that's what would be required. So in other words, you would want to be able to demonstrate that you are in fact incurring expenses that you need to cover over the next foreseeable future in order to be ready to launch that business as you had planned. So yes, there is an opportunity for this.
All right, thank you, Mark. Okay, to keep us on our timeline, we're going
Thanks.
to go ahead and bring up Janie Sacco, First Vice President at U.S. Metro Bank.
Good afternoon to everyone, and thank you to One Redmond for inviting me to participate in this. Basically, what I would like to do is just give you a little bit of an overview of how you can prepare to get ready for the Paycheck Protection Program loan in anticipating it coming out either tomorrow or Monday for our guidelines. What I would encourage you to do is for all the businesses that have been in operation prior to January 1st, 2020, to ask your tax preparer for your W-3, which is the document that supports the dollar amount that was paid toward payroll last year. I would encourage you to get all of your organization documents together. And those documents include your business license, your certificate of formation, or your certificate of incorporation, depending if you're an LLC or a corporation. And then your operating agreement, if you are a limited liability company, or your your bylaws, if you are a corporation. So I'm going to go through this one more time just to make sure. Your certificate of formation, if you're an LLC, your articles of formation, if you're an LLC, your operating agreement, if you are an LLC, and your business license. If you're a corporation, then you would have a certificate of incorporation, you would have articles of incorporation, you would have bylaws, and then you would have a business license. The importance of organizing and getting those documents together enables your lender to make a determination of who is authorized to sign to indebt the company. So before you send all of those to a lender, just make sure that that is identified in there, because that is really an important piece. This loan, this paycheck protection loan, is not personally guaranteed, and it does not have collateral requirements. So we really need to focus on who is authorized to borrow on behalf of your legal entity. The other thing I would encourage you to do, just to have at the ready, is if you have been in operation for 3 years or more, have your business tax returns, if you file separately, ready to go for 2016, 17, and 18. If you have not filed your 2019 tax returns, that's fine, but please have your balance sheet and income statement, company prepared, ready to go. And then for 2020, I would encourage you to have your balance sheet and income statement for as late as possible in the year ready to go too. All of those documents help us validate your operating expenses. And the things that we kind of know on this particular PPP program is that payroll, rent, utilities, interest on any debts that were incurred before February 15th, 2020 will be eligible for uses of money under this program based on what we know right now. So all of these documents help us define what those items are. And if you have been in business for just this year, let's say you started January 2nd, January 1, please don't self-eliminate. Put your application together and get it in, and provide as much information as you can to document your operating expenses and your revenue stream for this year. That's really key. If you are a nonprofit or other organization related to this program, you are eligible to apply for it. So you don't have to be just a for-profit corporation or LLC or partnership or sole proprietorship. The nonprofits and other organizations are also eligible for it. So what I would encourage you to do is get all of your organization documents together for the nonprofits that are out there, and make sure that it clearly identifies, again, who is authorized to sign on behalf of that entity. And the thing that I want you to really just embrace is that we are all in this together, and we're all learning this together, because with this particular program, it is unlike any other that the SBA has enabled small business owners and other entities to participate in. So we are going to be reviewing the guidelines, which hopefully we will obtain tomorrow, or as soon as we can, and really focus on how to help you and ask you for the proper documents. So that Paycheck Protection Program application document is out there. And what I would encourage you to do is to fill it out, review it, fill it out to the best of your ability. If you have more than one 20% owner in your company, be aware that at the bottom where there are the certification sections on that form, everybody who owns 20% or more of the company should initial by those certifications. Okay? And there are a couple of addendum items that are identified in that form, but what I want you to understand, there is no pre-formatted addendum form. You are just putting the information together in a Word or Excel document and then labeling it Addendum A or Addendum B. And Addendum A has to do with if you have more than one company that you have ownership in at 20% or more. So you just go through and identify the business name, who the related owner is to all of the entities, and the percentage that they own in that related entity or affiliate. Okay, so this application document is very streamlined, and it's designed to be easy to complete and easy for us to process. So again, please have patience with your lenders. I definitely encourage you to go to your bank of account and seek help from them initially. If they can or cannot help you, they will let you know right away. And then, as Mark said, there's several financial institutions, both for-profit banks like I'm at, or the credit unions as well. So just keep that in mind, and again, have patience with us because we don't have all of the answers yet, and that's really the key. So we're going to try and get through. All of us as lenders in the SBA product are really designed to be helpful to you and educate you and get you through the process for their institution as timely and quickly as possible. So please just have some patience with us. And I think that's actually about it for me.
Yeah, we've got you right on the nose there, Janie. Thank you. We wanted to take a couple of questions that we've been sourcing here from our feed, and I want to remind everybody that we are recording this. We will send you a link at the end, and if we don't get to your question again, we will try to answer as many of these as possible and get them over to you after the webinar. So we have a lot of questions from sole proprietors that don't have payroll, and how do they do that? Do they average their monthly income? What advice do you have for them?
For sole proprietors, your reportable income is your operating profit. That's what you're taxed on, and that is what you would have as your income for you personally. So what I would say there's probably no right or wrong answer that I can give you, other than rely on your tax forms to indicate what your income has been historically, and that will show on your personal tax return and your Schedule C in your 1040 tax document. And I think we're going to try and be really prudent about making sure that we can document how much money that you draw to live on versus how much money has been left in the business for operating expenses. So that's how I would treat that.
All right, thank you. We have another question from some folks that are nonprofits, and there aren't any owners. So how do they list? Do they list their board members as owners? How does that work?
What I would say there is, again, go back to your organization documents, and whoever is authorized to sign to indebt your organization on, which usually it's the executive director. It may be someone else within your legal entity. So rely on your organization documents to help you there. And because this particular product does not have personal guarantees, that helps out quite a bit. So check your articles, your bylaws, your documents to see who is authorized to indebt the company, and that's who I would have sign the application for.
All right, thank you very much for that clarification. I think, hold on, there's a lot of questions coming in, so let me feel through here. It says the SBA info sheet does not say withholding, and FICA needs to be deducted from gross payroll, but the bill state that? Do payroll taxes need to be deducted from payroll cost numbers?
This is one that we don't know yet. I'm going to say that it's not really that defined, and it will come out in the guidelines. What my understanding is that state and local taxes are part of that payroll calculation. If anything is not in there, it would be the federal taxes. And I think this may go back to the issue that even on a conventional SBA loan, we are not allowed to use proceeds for any kind of federal or designated taxes. So I think that's why some of those things are pulled out. And Mark, maybe you can answer that one a little bit better than me. Do you have any information on that?
I don't have additional information on that, Janie.
Okay. So I would say, I think that the federal taxes are going to be pulled. That would be my guess.
Okay. So I have one, I think we have time for one quick question here. And this question was from a business owner that had to close their shop doors due to no work. They are covering 17 employees for payroll a week. And they're trying to figure this all out. Should the employees not go to unemployment while they're trying to get this payroll protection loan processed? Is that correct?
I think they should.
Should, okay,
Yes,
so
they
employees
should.
go, okay.
Yes. And I'm a small business owner too. And my husband and I, we laid off all of our people because our doors are closed. When we open again, and we're allowed to open again, the intent is to rehire all of those individuals. And this PPP loan is really designed to help fund that payroll. And there is a period of time where these employees have to stay in order to meet that debt forgiveness hurdle. And what we've been hearing is it's about 8 weeks. So I think you can't, the employees, if you had to close your doors and lay them off so that they can get unemployment benefits and then you hire them back, that's kind of a no harm, no foul issue. Let them do that.
Great, that's perfect. All right, so we are just keeping on track today. I wanted to quickly mention that we are hosting a payroll protection program webinar next week. We're working on that now. We know that everything's very fluid, but more information on that later. Our last speaker today is Cynthia Cowell, Public Information Officer for the U.S. Small Business Administration in the Office of Disaster Assistance. Cynthia?
From the Office of Disaster Assistance. And I'm going to tell you a little bit about the economic disaster loan.
Oh, Cynthia, you're a little bit hard to hear.
Let's see, hang on just a moment. Can you hear me now?
I think so. Let's give it another go.
Okay, not just a moment. I'm trying to do this other one. Okay, how's that?
I think that's better. Thank you.
I can't hear you. Okay, can you hear me now?
Yep, we sure can.
Okay, I'm gonna have to use my phone. Can you hear me okay now?
Yeah, I think so. I think if you mute the webinar in the background, that might help.
Okay, all right, thank you. The SBA is offering the economic impact disaster loans. These loans are up to $2 million with a term of up to 30 years. Interest rates for for-profit companies is 3.75%. And for private nonprofits, it's 2.75%. And this money can be used to cover your payroll costs, salary, and this is also for rent or mortgage payments, material costs, and your regular payments on pre-existing debt. You can't use these loans to refinance your existing debt.
Hey, Cynthia, we're having a really hard time hearing you. I'm wondering if you have two programs open, or Mark, is it something that you might be able to pick up here?
Yeah, absolutely.
I have to find everything on here.
I don't want to cut Cynthia out, but
Okay,
yeah,
we'll do some troubleshooting on our back end. If you can pick up a little bit,
you
that'd be great.
bet, you bet. Absolutely. Thanks again, you guys. As I think I described at the beginning of my comments, we have these two different programs available to kind of accomplish a similar objective, and that the Paycheck Protection Program that I described, and what Cynthia is talking about, which is the Economic Injury Disaster Loan Program. Both are intended to really allow businesses to access the funding that they need to maintain their basic operations during this time of economic interruption. So the idea with the economic injury disaster loan is that, unlike the PPP or Paycheck Protection Program, these loans are actually made directly by SBA. And you can go to a very slick, redesigned application site at sba.gov, and then you click on the link under the coronavirus, and the EIDL, Economic Injury Disaster Loan, is contained in the menu of different programs that are available to businesses. If you click on it, you will actually have the ability to go right to the application site. And so the intent here is, what your loan is going to do is hopefully cover your operating costs for up to 6 months. So what you're going to be asked to provide is a fairly limited set of information, but certainly cost information is a key part of that. Monthly cost information that would then be multiplied out by 6 is kind of the approach that they're going to take. And among the different things that can be contained in that monthly cost calculation, very similar to the PPP. So we're talking about all your labor costs, other operating costs such as your lease expenses for facilities, lease expenses for any equipment, fixed debt obligations on a monthly basis. We can't refinance debt, but we can make debt payments with this loan product. So the idea here is that you're going to go through this abbreviated application, which is in a very robust environment. So it's going to be able to handle many applications and process them efficiently and timely. Ultimately, when you get to the end of the application, there's a neat new feature that was not part of the original economic injury disaster loan, but came on as a result of the CARES Act. And that feature is, you're going to get an offer for a $10,000 quick cash advance on your loan. You might think that sounds too good to be true, but it's not the case. It's a legitimate deal. You're even going to be asked for information that's going to allow them to wire those funds to your lending or to your bank of account. That's intended to get people money quickly. The overall process, I think, we have been talking about a total of 30 days to funding. I'm imagining that may be quicker now that we've upgraded our capacity and our systems. These are loans that are going to be programmed out over an extended amount of time with the intent of really making the burden of debt payment as minimal as possible. So what I mean by that is you're going to be offered either a 15 or a 30-year maturity on these loans. The interest rate is fixed at 3.75%. And there's a built-in 12-month deferment associated with the economic injury disaster loan program. So you are not going to have to be burdened with or otherwise concerned with making payments on these loans for a full year after receiving the funds. Again, the bottom line is both of these programs are intended to help businesses sustain themselves until such time as we return to normalcy. And at that time, you guys are going to be in a position where you will have been able to either bring back or retain your employees and keep all of your other costs in line and up to speed as far as other kinds of fixed monthly expenses that you might be facing. I know these aren't the ultimate solution, but they could be a great tool for a lot of businesses. What I'm encouraging people to do at this point, again, is to maybe think about, if you haven't made application for an economic injury disaster loan yet, think about waiting until SBA publishes the regulations and policies on the Paycheck Protection Program. That way you'll be able to knowledgeably sit down and look at both programs and make a determination as to which one is appropriate given your particular circumstances. But again, great tools, both of them, and may not be a fit for everybody, but there are some features that I think are really attractive. And again, same as the PPP, our intent with the EIDL loan, the disaster loan, is to get this money out as quickly as possible. And that goes to the abbreviated application process and really the limited documentation that you guys are going to have to provide in order to access these funds. So with that, I'm happy to take any questions on that, or hopefully Cynthia could maybe chime back
Yep,
in
I think
if there's
Cynthia
something I
called
can't
back
handle.
in. Cynthia, are you there?
I am. Can you hear me?
Oh, much better, much better.
Oh, good.
All right, well, I think we covered some of it, but go ahead. Why don't you take a few minutes?
Well, I'd like to let people know that the application deadline is December 31st. You do have a little bit of time to get your applications in, but please note that all applications are processed in a first-come, first-served basis. So as soon as you know more about what you want to do, it's a good idea to get your application in, even if you don't know for certain what your expenses will be. There is no fee to apply for this loan. For any loan of under $25,000, there are no application or processing fees and no collateral required. For any loan greater than $25,000, there is a $100 UCC lien filing fee, and that's added to the amount of the loan. We don't take real estate as collateral, but we do allow for, we will use your whatever assets you have as collateral. We will never decline you for lack of collateral, but we will attach whatever you have available. The term, like I said, is up to 30 years. The interest rates are 3.75% for a business and 2.75% for private nonprofits. Nonprofits are eligible, so are religious entities, but the religious entities can only apply for help for their secular items, such as a daycare or a feeding program, something of that nature. The payments are deferred 12 months from the date of the note, so that gives you a little bit of time to catch your breath and get things going. The applicants are eligible for an advance of up to $10,000 that is forgivable, and that is requested on the actual application. There's no documentation required for the $10,000 advance. And if someone has already submitted an economic injury disaster loan program as recently as last week, they must reapply using the new streamlined application and check the box for the advance as well because the advance was not previously available. So if you filled out an application online that did not have the big box at the end to request the advance, then you need to go through and do it again. It's a very short application, no more than 10 or 15 minutes to complete it and submit it. And then you should get an email shortly afterwards that tells that we've received your application and that we are processing it. And
So
with
Cynthia,
that, I think.
Oh yeah, I was going to say we have about 7 minutes left on the webinar, and I wanted
Yes.
to make sure to get a couple of questions to you. We have many
Absolutely.
questions about applying for multiple programs. You know, can they do the EIDL and the PPP? If they get one, can they do the other? What is the guidance on that?
Well, the programs can't duplicate benefits from any other program. If you apply for both, then we will make sure that you don't get double payments. That's just our policy for every disaster. But I would suggest that you go ahead and apply for what you need and then figure it out once you find out what you're eligible for.
Super, thank you. And another question here, they said, do we apply for the payment protection program option directly on SBA or through the bank? And is the economic disaster $10,000 quick cash meant to be paid back?
The up to $10,000 that a business could be eligible for is forgivable. You have to meet certain criteria, and that will be explained to you, but it's mostly just payroll, keeping your employees on the payroll or rehiring them once you have it in place, and things like rent and your payments. That part, like I said, is forgivable, and it's still a loan, so if you don't comply with the requirements, you will still be required to pay it back.
Great. We have another question on forgivable loans. Is the economic injury disaster loan, is any of that debt going to be forgiven like the PPP?
Up to $10,000. Whatever you were given as an advance is forgivable. Now, if you are not approved for an economic injury disaster loan, but you received the advance, you don't have to pay it back.
All right, perfect. Well, I think we only have the last few minutes, and so we're going to go ahead and wrap up, and we have hundreds of questions here, so I want to thank you all for participating today. Our team will go ahead and go through these questions and get some answers back to everyone here on the webinar. I want to thank our speakers today. We very much appreciate your time. We want to thank all our partners on the East Side who are working hard to support the business community during this pandemic. And I want to thank you all for participating. We had over 500 people here today, I think maybe even close to 600. So again, we will be sending a follow-up email with a link of the recording of this webinar and links to the resources that were referenced. Next week, we are working on a follow-up webinar on the Paycheck Protection Program. And we also, tomorrow, the SBDC is putting on 2 webinars that will go through more of the application process as well. For a list of these weekly webinars from various organizations, you can go to our website at eastsiderecoveryhub.com, and you can click on the links to get registered. And thank you all for joining us, and be looking out for the email for the recording and answered questions. Thank you.
Thank you.